What is going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the TheChartGuys team for more than half of that, where I head up our futures room and our swing report. In this video, we will cover the overall market, some hype sectors, hit you with some trade zones, review some trades from the past, trades of old, and that's pretty much it. So let us get into it, shall we? All right, so starting off with SPY, broke to new highs on Wednesday, and so really there's no red flags for these buyers, right? This was the last challenge for them to overcome, and they were pretty much closed out the prior week, right above the point of control of this key structure. It was key supply, now it's acting as key demand. And so while just like it was our key reference when we were looking at it as resistance, with this rejection here, for example, now it's still our key reference, but now it's support, right? It's the demand zone. As long as 520.31 is supportive, that means that this structure is, being perceived as an area of demand. And as long as that's the case, then bigger picture, these buyers are totally fine. So trying to set a new daily higher low over 515.14, potentially set it here at 527.32. If we can break over 529.52 on Monday, then that daily higher low will be set. But you know, I wouldn't be too surprised if, like, especially if what happens next week is if we get a higher high. So let's say we set this higher low here, and then we break to a higher high, and then we do not see follow through. That would increase the odds of us seeing some, bigger picture daily balance, something like this, or even something like this, because this is quite a ripper already. I mean, it's no, we never know, right? There's no predictions. I mean, I'm not making a prediction, but what we do know is how things should shake out, right? If it's going to shake out like X, this should happen. If it's going to shake out like Y, that should happen, right? So if we're just going to rip to new highs, then we'll break to new highs and then we won't see much retracement and then carry on buyers, right? But if we do break to a new high and we do not see follow through, roll back down under this high, right, the current all-time high, then I think we're probably looking at a battle to see whether or not this structure is going to hold price. Okay. Um, so that's pretty much it. There, I think it definitely did not come into our conservative trade zone. I don't think, yeah, because we were looking for a pullback and it just didn't come. So now what we can do is we can just move this whole guy up, really, right? Something like this, totally reasonable. We can make some adjustments. Like, okay, let me just zoom out a bit here. Hold on, because I just want to, use these volume nodes, right, as our references. So we'll just give me a second here. Honestly, this is fine. Like something like this, maybe, make sure we get a fill over there. Something like this is very reasonable. And for targeting, let us, I guess we'll have to use our pivots. And so as long as we're holding over this R1, well, these buyers should be trying to get to the R2, right? So put that all together, and even just a trade like this is already 2R just to get back to the high with a little bit of extra juice. But if you do hold this area, I don't see why they wouldn't be trying to go for R2. It's just how markets tend to work, really, right? So that's really it for SPY. And at this point now, the weekly time frame also has a ton of space for a higher low as well now. So buyers looking totally fine. There are no red flags for buyers as of right now. And so it's going to be all about 524.61 next week, right? As long as the sellers cannot get price back under 524.61, that means higher prices relative to the prior all-time high are being accepted, which means the buyers are totally comfortable. Okay, so that is pretty much it for SPY. Moving on to the Qs here. So for QQQ, this was quite notable, and shout out to the futures gang, David. I don't know if anybody else got it. So just David, nice job. He got this trade that I was looking out for during the morning stream. I do the morning stream for our community on Fridays, and I was looking out for it. But because most of the day was just chopping around 2 o'clock, I went downstairs to the gym and just missed it. So is what it is. No biggie, but this is exactly what I'm talking about. So here's this prior all-time high at 449.34. And as long as these buyers are not finding acceptance back, I'm sorry, as long as these sellers are not finding acceptance back under 449.34, well, then obviously higher prices relative to the all-time high are being accepted. And even if they were to crack back under this prior high, no big deal if these buyers can hold over the point of control at 444.74. That would be the best case scenario, because then it would still be affirming this structure as demand. Okay, So that is it. Lots of space for a daily higher low to be set over 437.55. Anything over that will be good for another daily higher low. If they can break over 452.72 on Monday, then we'll have a new daily higher low established at 449.54 over here. All right. That's really it for the Q. So let's check out the trade zone. And obviously same dealio. So we can just move this guy up as well. Hang on. Something like this is pretty reasonable. R1 for the year is just a wee bit higher. So something like this I think is very reasonable for trade zone and QQQ in the next week. And if you are saying, you know, if you're thinking to yourself right now, gosh, Lamont, I really wish we would have captured that Qs. Join our community, you know, give us a shot at least. You know, we do free trials every now and then. I'll be honest with you, I don't really do any of that stuff, so I don't know the details of it. But if you can get a free trial, get it. Links are in the description below. But I posted this trade live in our community. I made a post to Twitter as well. If you're interested in this, you can hit me with a follow. But I laid out all of this QQQ buy on Wednesday here, and it was just based on the fact that I do this morning rundown every single morning, right? And so on this morning, we're looking out for a potential test of 446.87 or 444.74, pretty much the same information that I'm telling you right now. But, you know, in our community, you know, I will talk about the actual play, day trading it, and, you know, post the entries or whatever. So if you're interested in trading along with 1,000 other traders, many of whom are, you know, full-time professional traders, links in the description below. Super supportive group. I love it. But maybe you won't. I don't know. And if it's not for you, no harm, no foul. We just wish you the best, really. So yeah. Anyway, that was a banger, you know, for NQ. So I really think it's very helpful to be in a group. Like if you're out there trading by yourself, it's hard, right? Like because dissonance becomes such a problem, right? Like you know you can subscribe to a lot of different conflicting ideas, right? But it's when you verbalize it, when you externalize it somehow through journaling or saying it out loud or typing it to a community, that you can then kind of reflect on what you're doing, right? It's also nice because if you're in the community and sharing your stuff, you know, very regularly, like you can just look back, right? Like I can go back years and say, oh gosh, look how far I've come, you know. And it's very helpful to keep your momentum going, right? Because trading is hard. There's a lot of ups and downs, and if you're having like a hard session or a hard week or a hard quarter even, it can be hard to stay motivated, right? To remember why you're doing this. But if you have all of these logs and a community to support you, you can very easily just say, okay, maybe I'm not where I'm at, where I want to be, but man, look at where I came from. You know, I'm well on my way. You know what I mean? So anyway, give us a shot if you are so interested. If not, that's fine. I hope you get a, you know, good value out of these videos. So anyway, that's pretty much it for the Qs. Like I said, anything over 437.55 is going to be good for a daily higher low, and the weekly time frame also has a lot of space for a higher low as well. Anything over 413.07 will be good for one. And I also made posts about, you know, in our community, I mean, about capturing this low over here, but I used TQQQ. I sold some CSPs and I bought some shares. So and again, you know, I only see you here once a week, right? But if you hit us up in the community, well, then I can see you damn near every day, if you like. You don't have to engage me if you don't want to. Anyway, so that is pretty much it for the Qs. And then for the Dow, oh wait, yes, this is a very reasonable new trade zone. And for the Dow, also did not come in, and I think it's reasonable to move this up a little bit higher as well, right? Basically, we're always looking for these like pullback plays, and we just want to pick location where it's reasonable for buyers to defend. So I think something like this is pretty reasonable, but if we're going to come all the way down to here, then we might as well also account for this high volume area over here, this guy over here, and then we'll throw our stop over here. Okay, so I think something like this is pretty reasonable. Let's check out the R for the year. Well, they should be trying to get to R2 now, so that's quite a ways away. I'm gonna leave it just like this because I don't want to like misrepresent it and be too ambitious or whatever. But if we do happen to pull back all the way down here and they do happen to hold this, then a revisit of these highs I think is pretty reasonable. Okay, so anyway, daily trend is bullish, higher lows and higher highs, and I guess we should mark this fella up now, right? Because this is It's a reasonable amount of balance. It's not like a lot of balance, but it is still more or less sideways trade. So we'll just mark it up as such. And at this point, I guess, I guess it wouldn't be too bad to increase this to the value area low. The R multiple really wouldn't be affected much. Something like this, I think, is very reasonable. Best case scenario for the buyers coming into the next week is just to hold over 398.82, just like SPY, just like QQQ. But if you can't, the next best case is to hold over 395.27. And honestly, it would be kind of a red flag if you fall back under 395.27 because you want this structure to hold price for the buyers that have most confidence. But even holding the value area low would be reasonable defensive posture. So, and really the volume picks back over here. So I'd rather not be so aggressive with this. And I mean, I'm not so aggressive in general. And these videos, again, I only see you once a week here, right? So I have to be kind of conservative with these. Otherwise, the hit rate will suffer. Like, it's a better mistake to miss, right? To not have anything and no harm, no foul is a lot better than being too aggressive and like taking damage on the account. You know what I mean? So obviously adjust to taste, right? If you're more aggressive, take it upon yourself. Great, That's pretty much it. Okay, IWM, this is super notable, right? Because IWM, recall, we're really, really focused on this guy, right? This guy is the key, right? This guy is what made all of these lows over here, over here, over here, over here, over here, made this high, made these highs over here. You get it. And then as we approach, this more recent price action, you can clearly see battles for it, right? Where there's POC rejection here, pop and drop, pop and drop. That's a high of the day is the point of control over there. Pop and drop, value area low rejections, value area low rejection, value area low rejection. High of the day on this session is the point of control. And now the low of the day on Friday, I apologize if you can hear the New York Symphony of Sirens. I live right off Restaurant Row, so it gets busy sometimes. Anyway, yeah, so this whole of the point of control is very notable, right? The more acceptance that these buyers can find over 207.61, the more likely we are to continue cracking into all of this supply left behind from 2021. Okay, so this is a super, super key spot here, potentially setting a daily higher low at 207.35 if buyers next week can break over 208.52. All right. And the daily no change level here is 206.62. So if these buyers can't get back under 206.62, then they don't negate the change of just this recent breakout. And if we do happen to set a daily higher low here, eyes on 211.88. And then, like I said, it's all about all of this supply here. So the more acceptance above this structure, the better. So far, so good. So let's see if we can keep the ball rolling, right? Because for the rut, we have been killing it, right? We got this sell over here, and then we got this buy over here that got you both targets. And so now, what are we going to do? What is the potential trade zone here? All right, so now what we really want to do is hold over 207.61, right? But also, we also recognize that this is the local daily demand. And so if the sellers do not trade through this local daily demand, well, then they're still being constructive on the daily time frame, right? Relative to this structure and this structure, because we build an area of demand by trading more or less sideways, break out, right? So now we know for sure this was a demand zone. We trade sideways again and break out. So what was here? It was net demand, right? And so then we can make our new trade zone. Something like this would be pretty reasonable. Trying to get back here first. Trying to get back here first, okay? And then for extended targets, we got to go all the way over here. So I guess we could mark this guy up, right? And we might as well now that things are starting to get a little bit more serious. And, again, like I've been saying, for weeks now, if the rally is going to broaden, which really there's no signs of it not doing that, right? Like right now, you have a situation where, you probably not like necessarily quantitative easing. You're not really looking at QE anytime soon, but you're looking at a dovish Fed, and you're like, and markets are positioned at all-time high. There's a lot of cash on the sidelines still. So at least that's what I understand. If I understand all of that correctly, I don't really see. It's not a lot of it would be hard to make a bearish case in my opinion. And so if that's going to be the case, then well, the small cap should have a go at it. And they're showing you the initial signs of that happening, right? So look at how notable this value area low was too. Guess we should have had it drawn up sooner, huh? All right. Okay. So value area low rejection here, and then let's see, another value area low rejection here. All right, so our targeting, let's do like that, something like that. So if we pull back into here, hold this daily demand zone, right? Then these buyers should be trying to come up here, 211.40. All right, that is pretty much it for IWM. Okay, so the dollar definitely showing some weakness now. And I think we had something here that should be flirting with being stopped out. This is, I mean, technically we already had a little bit of a bounce play, so if anything, it's a chop and stop, but either way. From here, you can also be looking for a sell, right? Because now that you're back under this structure's point of control, this guy was obviously supportive here, rejection, rejection, and then they break with no follow through here. So, you know, you can probably guess what a reasonable trade zone is, right? Something like this makes a lot of sense, right? You're just trying to get back down here. Right, this is the secret sauce, you know, trading technical sequencing does not have to be that hard. You know, it doesn't have to be complex, right? Something very straightforward. Something like this makes a lot of sense, right? Because you know, all right, well, if these buyers can't trade through this, if they can't find acceptance over this, then they're going to try to come where? If you fall out of here, you come here, right? Fall out of here, come here. Fall out of here, come here. Fall out of here, come here. Okay? So they're falling out of here right now. And if they continue to drill, they're gonna try to come down here. Okay? So that's pretty much it. Daily lower high is trying to be set here at 104.685. Gotta break 104.280 on Monday in order to confirm that daily lower high. Key support is at 103.965. Alright. We should probably update this to here actually. Why don't I do that right now? Should be here. Okay. So something like that. Very reasonable. Let's see. Weekly chart. Looking for a higher low. But I don't really care about the price action trend that much because bigger picture, we're just chopping around. All right, so the VIX is flirting with breaking to new lows. This is another, this is another element of that, right? Like, okay, so you have the SPY, QQQ, Dow, they're all at all-time highs. The RTY, the RUT, the IWM, whatever you want to call it, is finding acceptance over that key structures point of control 207.61, and the VIX is like dead, so there's just not a lot of indication of meaningful selling in the market. Now, don't get me wrong, like I know that most of the strength is in the Mag 7, but that doesn't mean that the market the rally, can't just broaden out. Like right now, it might just be all the Mag 7, but let's say the Mag 7 starts to consolidate, just trade sideways. If that capital starts to flow into the small caps, the market is going to be fine. So that's pretty much it. The VIX is approaching this key support here at 11.81. I continue to just care about 1544. I would not be surprised, with a spike in volatility next week because this is, typically when you get down to the 11s and the 10s or so, that's typically is usually when you start to see some bounce, but we shall see. And I still just really primarily care about 1544, right? As long as we're under 1544, then the status quo since the October low is still being maintained. Yeah, we had a good amount of like price action above it, but no, couldn't find acceptance, So that is, I think of mosquitoes in my office. Anyway, that's pretty much it. All right, so for NVDA, NVDA looks pretty healthy still as well, right? Like, so here we just set a healthy monthly higher low. Weekly time frame, also space for a higher low over 756.06. Daily time frame, space for a higher low as well, 885.29. Anything over that's going to be good for one. Back testing the daily no change level here, 922.20, so a super key test here. If these buyers can continue to maintain over 922.20, then obviously this structure is continuing to act as demand and there's just no red flags for them. Now, as far as trade zones go, I think personally, like, again, I'm a pretty conservative guy. I would just stick to this. You know, I would just run this again. Like I know it already came into the trade zone and got to our target. I'm sorry, this was the swing report subscriber one, but this one was the public one. I would stick to like either of those or a combination of both, right? So something like this I think is pretty reasonable for NVDA. Oh, no, I take that back. We have earnings coming up, so I would wait until after earnings. Let earnings shake out and then we'll come back and see if, what happens before we're doing anything else with that. Okay, so that's pretty much it for NVDA. All right, so moving on to Bitcoin. So Bitcoin last week, I let you guys know I initiated trade over here on this pass back over the point of control. And so chopped it up because, well, it got to where we thought it would get to, back to where the Depop was. I know the Depop moved down to over here, but I was still just targeting it over here because now we can be risk-free on this gain, even if our stop is under here. Okay, I actually split my stop up so that I could at least walk away with a little bit of profit. I have half the stop here, half the stop here. So worst case scenario, walk away with a little bit of change. And then we'll see how it goes, and if it just continues to rip from here, great, because this is potentially just a monthly higher low being set, right? So, again, another like point in favor of buyers, right? Because Bitcoin, is kind of a risk on asset, right? I understand that it's over the years, the narrative associated with Bitcoin has like kind of changed a lot. But you got to call it for what it is, right? It's not exactly like a super popular instrument for most folks to invest in. It's typically considered a riskier asset, right? It's, associated with younger people or whatever, crypto folks. So yeah, so another reason why, there's just not a lot of selling out there, not a lot of like selling tone out there, right? There's an element of a feel, right, to the market, right? When everybody's, it's kind of like if you were actually in the pits, right? Mr. Dalton talks about this a lot. James Dalton. He talks about like when traders were in the pits, you could trade based off of like feel, because you would have a room full of people, right? And so if it's like a flat market, a dead market, then everyone's just kind of hanging around, like talking about, I don't know, like their kids or whatever, and then or sports, I guess. And then when things were hot and heavy, right, whether up or down, everybody would be like, standing and yelling and be like, oh, more shares, or no, no, sell. You know what I mean? So there's an element of tone, right, when it comes to trading the markets that I think can be very helpful. And, I think Dan is really great at that. But anyway, so we're looking at this potential inverse head and shoulders. It's trying to confirm right now. At this point, these buyers really want to tag the developing value area high, because when you are balancing, what should happen is you test each side of the developing value area, right? And so here they test the developing value area high, then they test the developing value area low, then they pop over the developing value area high for quite some time. You fall back in, hold the deval, hold the diva, barely miss the deval, hold the diva, hold the deval. This was notable. POC rejection, big dig under the deval. This should have been the go sign for the sellers. If they were going to press the issue and mean business, they should have bounced, rejected from the developing value area low, and kept pressing lower, right? They did not do that. It was a very notable failure. So at this point now, these buyers got to tag the diva again to essentially respond in kind after the sellers were able to get us back down to the deval multiple times. Okay. And so from here now, if they can crack the diva, hold over the depot, and then start finding more acceptance over the diva, that's going to let us know that this is trying to confirm that monthly higher low into our higher high. All right. So space for a daily higher low in Bitcoin, anything over 60150 is going to be good for one. And that is it. Okay. 61003.36 remains key, as we've been talking about forever now, because that's this all-time high structure, right? As long as we're holding over 61003.36, the point of control of that all-time high structure, bigger picture, these Bitcoin buyers are doing just fine. All right. Okay, so Ethereum, we gave you this trade zone, and I've encouraged you to chop it up at this daily no change level, 3202.80. So it's dipped into the trade zone, chop, dip into the trade zone, chop, dip into the trade zone, chop, blah, blah, blah. So rinse and repeat. I still stand by this trade zone, as I've said for many weeks now. Still makes a lot of sense to be looking to accumulate off of this value area high and this point of control. That is off of this guy here. This guy is what made for this launching pad over here. And they also tried to defend here. Big old bounce, defend again. Big old bounce, get caught up here, right? And that's why our targeting, right, is into this structure as long as you hold this structure, because that's what happened throughout all of this, So That's pretty much it, right? I at this point now, if you're a more active trader type playing off of this, trade zone, you probably have grinded out a risk-free position at this point, I imagine. But if not, I continue to maintain that this is a very reasonable trade zone. I think it's totally fine to be operating with this. But we are still just chopping around, and these buyers still need acceptance over 3202.80 in order to negate the change of just this local breakdown. I I personally think it's like looking decent, right? Because again, if you don't trade through this, then you don't come down here essentially, right? Because this guy also made for these major highs, right? So obviously it was problematic for a while. So I would say that this is kind of a gateway to all of this. I know technically we should be using like this guy, but it's not really that big of a difference. So and they do have to trade through this first, right, in order to get down to even test this guy. So I think very reasonable to keep making plays off of this point of control, this value area high. That's 2570.27 and 2799.87. Probably should just call it 2800, but that's what it is. That is pretty much it. Space for a daily higher low to be set. Anything over, let's see here, 2858.76 is going to be good for a daily higher low. And you know what? Before we move on, I do want to kind of talk about this inverse head and shoulders a little bit more. Like if you're a pattern trader and you're not being considerate of context, you're probably having a hard time, right? Ask yourself honestly. If you are a pattern trader and you're a pure pattern trader and you do not contextualize those patterns, you just say, okay, that's a bull flag, I'm going to buy it. Or you say, okay, that's an inverse head and shoulders, I'm going to buy it. Or that's a head and shoulders, I'm going to sell it. And you're not considerate of context at all. Be honest, right? Are you having an easy go at it? Probably not, right? But if you do want to use patterns, right, which I'm not really much of a pattern trader, but if you do want to use patterns, if you contextualize the patterns within price action, I bet you have an easier go at it, right? For example, like if you're looking at something like a bull flag, right? And let's say that you have all of this supply here, and then you broke down, and then now you're looking at this as a bull flag, right? Is that good context for a bull flag? Like this might have the structure of a bull flag, fair enough, right? It might look like a bull flag, but it's sitting under all of this supply, right? So what are the odds of this bull flag confirming, as opposed to if it was looking like this, right? What if it was this kind of context? You have all of this, right? And then bloop, and then now you're bull flagging. Isn't this much better context if there's not just a whole chunk of overhead supply there? You see what I'm saying? So context is super, super key. So you look at this inverse head and shoulders, which I think Funko was talking about actually, now that I think about it. You look at this head and shoulders, right? And how might you play it, right? If you are looking at this head and shoulders and you are aware of this big old price action over here, this prior structure, you understand its significance because it represents coming back into all of this, right? Without coming under here, you don't come into here, right? And so now when you see this inverse head and shoulders, you can have a little bit more confidence knowing that this is not just a potential right shoulder, but it's also a defense of this very key level, this key level that represents change. You see what I'm saying? So if you think about the market from the perspective of change and contextualize your patterns within price and volume, I bet you have an easier go at it, And, you know, if you disagree, fair enough, but give it a go and then let me know. Let me know in the comments below if you disagree or whatever. um, Anyway, so CCJ, we gave you that trade zone all the way back down here, and I don't think this came in. Like it wasn't over here. It was set up over here, so we didn't come into the trade zone here. So now what I wouldn't really adjust this. Like there's the potential that they just break out from here, crack over $56, and just don't look back. I only see you guys once a week, so I don't really want to be terribly aggressive with this. I guess if I had to make for an aggressive adjustment, it would be like this. That's really it. It doesn't have to be more complex than that, right? Basically, a play off of this point of control, and we don't want to give up too much throughout this guy. Let's say we come all the way back down here, right? Because again, I only see you guys once, so we'll be as conservative as possible. Something like this, I think, is pretty reasonable. Whoa, where is the R2? It's pretty far. All right, so we're looking for like this guy, 56 first, and then the R2 eventually, if we can get through 52, of course. So something like this for next week for CCJ makes a lot of sense. It's really all about this guy. This is the key over here. This little, just like for Bitcoin, just like for the SPY, the QQQ, we have those little structures sitting on all-time high. That's what we care about here, right? This guy sitting at the prior all-time high, rejected price over here. rejected price over here, rejected price over here, battle for it over here, multiple rejections, blah, blah, blah. But now you have a pretty notable bullish candle here. So something like this is very reasonable. I would not be surprised if we pull back to backtest 50.22 again, just like they did here, right? You see how this was a pullback. They try to hold this point of control. They do. Get stuffed at the value area high though, right? And then unfortunately for them, fall back down under the point of control, but no follow through the value area low. And then here we are again at the value area high. So I think this is a very reasonable trade zone. If we do continue to see lower lows here, these buyers are still going to be confident if they can hold over this guy, right? Because this is more or less sideways. This is more or less sideways. All right. That's it for CCJ. For TAN, so TAN hit the target. Again, this trade zone has been set up since like somewhere in here, I believe. So once again, has come into our trade zone and hit that target. You know, again, trading does not have to be any harder than this, right? You establish the areas where it is cheapest to find out relative to the potential reward. That's really it, right? And so you look at these prior areas, you know that this is a key structure. You know that within this key structure, we have this key structure. I don't know why this drawing is gone. It's gone. Oh, I don't know where it went. But we use this fella as a reference as well within that big structure. But the idea is as long as you're holding over 39.98, they should be trying to come here, 45.20. That's exactly where they fail again, right? Because this is the key structure that's being tested right now. The buyers are trying to hold this structure as support. They're trying to affirm it as demand, right? And so what they have to do to affirm it as demand is to hold the point of control. What they have to do in order to advance is to find acceptance over the value area high. So if we're going to initiate buys off of the point of control, the first place that we should be expecting problems is the value area high. We should be taking exits no later than the value area high. Okay, so there you have it. You know, that's pretty much it, right? And so it's still all about 399.98 and 45.20. This is a notable selling, right? But these sellers still have to get price back under 42.02 to negate the change from this breakout. And as long as they're holding over 42.02, no big deal. All right. So that's it for TAN. This is potentially a big old falling wedge. Okay. Excuse me. Yep, that's really it. It's actually setting this weekly lower high here with a break of 42.53. It'll be set next week. And like we said, just all about this fella, 39.98. All right. And then finally, MSOs. So MSOs, not really any change here either. So for MSOs, oh, I'm sorry, for TAN, it's no change. You can still just keep running this same exact trade zone. It's just, the context has not changed. You know, as long as the context hasn't changed, whatever trade zone I presented should still be valid. You know, if you're not sure about it, shoot me an email. I'll try to get back to you as soon as possible. Give me a couple of days. It depends, but yeah, just have some patience with me. But I'll do my best to get back to you as soon as possible. So anyway, finally we have MSOs and MSOs. No change here either, you know, we're still watching this guy. This is our, you know, this is the real key, right? As long as you're holding over this guy, that opens up all of this kind of price action, right? And so as long as you're holding over this guy, they should be trying to come here, correct? This is exactly what happened last time, you know? And so on the way up to there, we have this guy that's been problematic here, here, and here, all right? So you look at what's happened though, and they are still trying to find more acceptance over this guy. And so I would say no change to this. You know, I do not love these couple higher highs that are lacking follow through. I don't love that, but you call it for what it is. The buyers are still playing defense. They're still playing good defense here. So that's really, I wouldn't change. I think you can still run this same exact trade zone. And if you did it again over here, because it came in over here, got to the target, it came back in again over here, got to the target again, came back in again over here, and it came just shy of the target. It's still very reasonable, essentially just looking for a responsive trade, where you're looking for this kind of back and forth action, because you know that, okay, well, as long as they don't trade through this guy, then they're playing solid defense. But from a local structure perspective, we understand that there was a lower low here, this lower low here, that did not see follow through, right? And so you pop back above. And so if these buyers are going to continue to be constructive after this lower low lacked follow through, what do they have to defend? They have to defend the low that didn't see follow through, right? You see what I'm saying? This snap move back up after breaking this low was the buyers negating the change of this breakdown, which that change continues to be negated as long as 8.28 is supportive, which is why that's where the lows of our trade zone are. Make sense? You know? So that's it. Space for a daily higher low to be set over 8.90. Anything over that's going to be good for a daily higher low. Trying to set one here at 9.42. Got to break over 9.97 next week in order to confirm that higher low being set. All right. So that is it, my friends. I appreciate you tuning in, sharing some of your valuable time and energy with me. If you got anything out of this video, we would very much appreciate a like and subscribe. Otherwise, hope you enjoy the rest of your week, and I hope to see y'all next week. Farewell.